Was good, boys and girls? I think I fixed my mic problem. They're using an earphone mic, so yeah. Uh, this is a trade recap and also how I deal with the psychology. How you deal? What should be your mindset when dealing with fundeds? Okay, I'm gonna go on the funded side of things first. Okay, I've went through four different accounts. First one got blown. I had three accounts I was running, and if some of y'all know the situation that happened, I don't have those fundeds anymore. But with me experiencing that 4 times, I'm going to share some of that experience with you, which is ideally you want to just take your time and have proper risk management. That's it. You don't want to you can't be going in there saying that I'm going to pass it in 2 days. You can't be going into the trade. You can't be going into the markets saying that okay, then I want to hurry up and reach this amount of money or reach this amount of percentage of the profit target. You just got to take your time, because with that mindset, that's how you blow accounts. That's how you essentially blow the account quicker than it's supposed to. That's how you don't get the ability to recover yourself. Because if you're trying to make the most amount of money possible, hurry up and clear the profit target, then it means you're going to be over risking. You're not going to be applying proper risk management. And let's say you get stopped out on a trade and you have potential to take another trade. Well, you just hit your daily loss limit and you can't re-enter. So that's why I believe no matter if your win rate is ass, no matter if anything else, you should have you should think of it as a marathon and apply good risk management and take your time. Now, saying that to say this, let's delve into the trade recap. I took a trade in London. I recently cleared my maps. I recently cleared the charts and shit. So the trade position thing is deleted. But I'm gonna delve into the 2 trades that I took for New York AM. So and pre-market. So this is the anchored volume profile. I use it for a good idea of what my bias should be, but I still use high time frame trend and price structure for that. So coming into pre-market end of London session, you have the point of control. Price is accumulating up the point of control, which that's what markets like to do. Market likes to consolidate. Okay, as much as we hate it as traders, market loves to consolidate. So whenever it's around a point of control, that shows that the market and price inside said market is very balanced, and it'll consolidate. That's what market wants to do. It wants to seek balance. Then it manipulates, sweeps outside liquidity, and then it buys. Okay, we push it up. We push up. Now I'm gonna tell you what happened. I could have took a trade right here, and I was contemplating it, so I could full port CPI. I was contemplating to a full port CPI off this alone, because it's a perfect AMD. You have accumulation right here, massive sell off, which is manipulation, came up for a distribution, broke structure. I could have put a limit at this high when it broke structure, and then yeah, we'd be in a bit of drawdown, but I could have caught CPI. But thing is that there was no guarantee that it would go up, and before this I was pretty bearish. So yeah, so that leads to this trade right here. This trade right here was a trade of this gap, this 1 minute gap of CPI. So CPI came up and then it tried to balance itself out up here and then created a 1 minute bullish gap. And with my experience, price tends to continue off of CPI. It always tends to continue to move off of the CPI. So whenever there's a big move up or big move down, it will tend to continue off of it. Even if that's not the trend for the entire day, it will tend to continue off it. So I just put my limit there, wait for it to come down. Thank God it wasn't a lot of drawdown because I was expecting it to come down lower, but the volume profile speak for itself. I didn't draw this out at that time, but volume profile speak for itself. It wouldn't go any lower. So thank God for that. I deleted that drawing as well. Like I said, I cleared my charts, but there's a 4 hour gap. We're in a 4 hour bearish fair value gap, and I targeted a little bit above the CE, which the CE was here. So yeah, as you can see, price used it as support a little bit. So the CE is definitely right here. Okay. Now, after that, I was looking for my actual setup. Okay, I was looking for my actual setup. So coming in the market open, I still had a bullish bias in mind because what I said before, price tends to continue off of CPI. So saying that to say this, I was looking for, based off my setup, I was looking for a 15-minute bullish structure, and thank God today was very easy as fuck because there was the only 15-minute bullish structure that was around was this 15-minute fair value gap caused by CPI. So I marked that out, and then I marked out the OTE and the fixed range volume profile of that move on the 1 minute, which is this right here. I drew it out after. And the most optimal entry I saw was the CE of the range, the consequent encroachment of the range. The 6-2 level had buying volume, but it didn't have that much, and down here was basically dead. There was no sellers, but there was very low buying volume. So I was like, the best place to put my entry was at the 0.5 or at the VAL of the volume profile, which I decided to put it at the CE of the range because the VAL has 104 to 90. That ratio didn't really look too good. There was high selling volume over buying volume. Despite my bias, I didn't want to mess around with that, so I played it safe and put my limit at CE. Before 10 a.m. opens, we did touch the limit and we went up. So ideally, this position is supposed to be all the way over here, but it's whatever. I was targeting here. I was targeting New York high at the time, and then 10 a.m. opens around here. Yeah, there it is. 10 a.m. opened around here. Then it came down back. I wasn't panicking. I wasn't panicking or anything. I was like, it's either gonna come down into the OTE of this leg and then continue, or it's just gonna come right back to my entry and then continue. Which that's what it did. It came back right to my entry, and then it continued. So yeah, I targeted right here, which was New York high at the time, as I said, and that's it. That was today. I was gonna target here. As you can see, I drew it out to see how many more points I could have got if I targeted up here, but it's whatever. It's whatever, you know. And yeah, that's it. That's it. I could have, if I stayed on the charts a little longer, I could have probably took a trade off this, which is the same setup, but this time we're bearish, and could have caught in a good move. But in all honesty, I'm being delusional. I still would have had a bullish bias in mind and ignored this and then just meh. So it's whatever. It's whatever, you know. At least I end the day on green. That's it. Yeah, that's the setup. That's the trades I took today. Ideally. So yeah, peace. I'll be seeing you guys tomorrow or probably London. Probably do a recap of London in tomorrow's video. I'm trying to build a YouTube following. I'm trying to improve, motivate people, and teach people about trading because this shit isn't a scam. If you want to be in trading, you gotta be extremely dedicated. You gotta be in love with it. You gotta focus. Okay, this shit isn't a scam. If you are aware of basic concepts, whether it be ICT, order flow, fucking support and resistance levels or whatever, as long as you're aware of the core fundamentals of a concept and you build a strategy, forward test it, back test it, and build up your win rate using stats from the trading journals, you should be okay. And that's how it is, you know. So I'll be seeing you guys tomorrow. Peace.